Hi everyone, we're Deva and Eric with Compass, and we've been helping people buy and sell homes in San Diego for 20 years. San Diego is one of the hottest markets in the country, with median prices rising by almost 4% in the past year. Today we're discussing the latest trends in the market. Let's get started by talking about what's happening right now, and then we'll zoom out to look at long-term trends.
Let's start by having a look at the month-over-month trends. So from June to July, we saw a negative 7.4% change in the number of new listings, negative 0.3% change in the number of pending sales, negative 1.1% change in the number of closed sales, a 13% rise in the overall number of homes for sale, and a 1.2% increase in median price. Buyers are still really frustrated out there because there aren't that many homes to look at, and the ones that they do look at are selling like crazy, multiple offers, and obviously price is still increasing.
So it's still super low inventory, and buyer demand seems to be keeping pace with new listings.
That's right. I mean, the number of new listings and the number of pending sales on a week-to-week basis are basically right on top of each other. So every new listing is essentially getting snapped up pretty quickly.
For the most part, if they're priced well.
If they're priced well, yes, that's right. And you know, pricing a listing well right now is not that hard to do, but we do still see some sellers reaching for that price that just isn't realistic, and those are the ones that are causing inventory to rise a little bit.
All right, well, let's look at some long-term trends. We've got these new charts from the San Diego Association of Realtors, and let's check out new listings. So what's up with new listings?
Yeah, new listings. I mean, that's what everybody's looking for. If you're a buyer, you're looking for new listings. Sometimes I think going after old listings might be better for you, but that's a different video. So looking at the bar charts here, we have detached and attached homes for July of 2021, 22, and 23. Looking at year-to-date numbers, you know, same thing. It was a little off last year, and then it's just fallen off a cliff this year in terms of new listings. And if you go back and look at this 10-year chart down here,
you know, I like to look at long charts, and this one is interesting because we've got this pattern, you know, this goes back 10 years, this pattern of what happens every season. We've got the lows in the winter, and then it bumps up in the summer and dips back down. But the last couple of years, that pattern has just been blown out of the water.
It's all messed up once you hit right about, coincidentally, right about the early part of 2020.
Things got all 2020 and 2020.
Yeah, and then since then it's been weird, and now we've got this weird little squiggle here that we've not really seen before.
It's a weird looking chart.
Yeah, it is.
Well, let's check out the closed sales.
Okay, so looking at closed sales, again, same thing. 3 years here, 10 years down here.
Similar story.
Yeah, 2021, and then we dropped by practically half the number of closed sales, 42% down in 2022, and now we're 7.9% down from that. So what this really means is, you know, here's 42% less, you know, transactions happening.
And again, looking at that long chart, it's gotten pretty funky in the past couple of years.
Yeah, again, we have very, very similar patterns going on until we hit that early part of 2020, and then it just starts to get weird again.
All right, well, let's check out median price.
Yes, median sales price is going the other way. It's going up.
Supply and demand.
Absolutely. So, yeah, looking at 2021 for detached homes, you know, we were at 875 in July, and then 955 last July, and then we're at 990 this July. So we are, you know, hovering right around $1 million median detached home price in San Diego County. And then if you look at the year-to-date numbers, we're almost even with last year in terms of year-to-date pricing. So when we look at the historical median sales price by month chart, it's kind of doing, well, some similar to the opposite of what the other charts are doing. Although it's interesting because you get back here to 2012, and this is when we started to come out of the Great Recession. Prices started coming back up again. And it was a very, very kind of modest growth for several years until we get again to the early part of 2020 when it started going up dramatically. and no one really expected that, but no one really knew what to expect.
And we had this dip that happened towards the end of last year, beginning of this year, and then it's rebounded.
Right, yes, this is where interest rates jumped up by roughly 3 points more or less overnight, and then we saw an explosion of inventory at that point and a decrease about roughly around 15% decrease in median price very quickly, and then miraculous rebound. So that's where we are today with regard to median sale price.
All right, well, is it time to talk about interest rates?
I guess so.
Let's
I guess
do it.
you can't really do a real estate update without talking about rates. I wish I didn't have to. We're last week was 6.96 on average, and many buyers here in San Diego County are looking at rates over 7 because they're in the higher loan brackets. So 6.96% is ugly. There's no other way to call it. It's ugly.
Most experts are predicting that rates are going to come down this year. They don't agree on when, but that's pretty much the word on the street. So we're hoping that happens soon, because I feel like once rates start to come down, things are really going to break loose, and we're going to see a lot of activity in the market.
That should be true. I mean, when rates start to come down, that's going to free up in the minds of a lot of sellers, the ability to now sell my home and buy another home. Buyers are still buying right now, although just enough to keep that new listing and pending sale number about even, so that inventory is only growing incrementally, unlike last summer when it rose quickly and then there were suddenly a dramatic increase in days on market and number of homes for sale, which caused prices to drop. So yes, reduction in interest rates is going to hopefully free up a lot of people to do what they've been planning to do, and then spur some heating up of the overall number of transactions, because that's really what we need to see in order to have a healthy real estate industry, which leads to a healthy local economy, because a lot of people work every time a home gets sold. It's not just realtors getting paid. It's loan officers, escrow companies, title companies, handy people,
termite guys, carpet folks, roofers,
the trades, you name it. So yes, a healthy real estate market is good for all of us.
All right, well, is that it for today?
That's it for today, folks. We'll be back next month with another one of these month over months, and then watch next week. We're going to do some neighborhood real estate updates.
Got some special requests.
Some special requests. And then, of course, everybody's favorite program, San Diego Market Watch on Thursday.
We hope you enjoyed this video. If you did, please like, share, subscribe, leave us a message in the comments, and we'll see you next time.